Thanks for joining us today. Hello and welcome to Business Daily. I'm Lee in Seoul. We have plenty of stories lined up for you today, so let's get started with a look at today's highlights. Samsung Electronics has reached a deal to buy U.S. auto technology firm Harman for $8 billion to boost its presence in the connected car market. As the U.S. backs out of the 12-nation Trans-Pacific Partnership, Korea also announces it will slam the brakes on efforts to join the mega trade deal. We'll sit down with an expert to talk about this. Samsung Electronics has agreed to buy U.S. automobile technology company Harman International. Now, the deal is expected to boost Samsung's presence in the fast-growing market of connected car electronics. For more on what this means for the tech giant, here's our Kim Min-ji.
It's expected to be a breakthrough for Samsung Electronics. The tech giant is set to buy U.S. automobile tech company Harman International for $8 billion, marking the biggest overseas acquisition by a Korean firm. Harman, a leading maker of connected car and audio systems, has its products which provide infotainment, connected safety and security services, installed in more than 30 million vehicles produced by car makers such as BMW and Volkswagen. About two-thirds of Harman's annual $7 billion in sales come from its automotive operations.
The acquisition comes as we plan to build a new platform in the connected car sector by combining Harman's know-how in automotive electronics and Samsung's IT and mobile technology.
Connected car technologies is a promising sector, with the industry expected to hit $100 billion by 2025, a spike from $45 billion in 2015. The deal is expected to create a synergy effect and give Samsung a competitive edge in the automotive electronics industry, which could potentially become a new cash cow for the company. While Samsung itself will not be manufacturing cars, the growing use of electronics and software as well as connectivity to smartphones within vehicles is expected to provide the company's other businesses with more opportunities as well.
The future technology is going towards artificial intelligence and infotainment, and likewise Samsung is looking to expand into these areas. Buying Harman gives it a stronger footing, and by combining Harman's strengths with Samsung's, it can later incorporate new solutions to other areas, like smartphones.
The acquisition comes after Samsung's heir apparent Lee Jae-yong officially ascended to the board of directors, a move seen to strengthen its grip over the family-led conglomerate. The latest deal shows the new Samsung under the younger Lee is open to fostering new areas of growth, including in sectors it has little track record. Kim Min-ji, Business Daily.
In a sign of the gloomy economic climate in the nation, the combined investments made by Korea's 30 largest business groups has seen a sharp decline this year. Market researcher CEO Score says over 250 companies of Korea's 30 biggest conglomerates invested $38.7 billion up to the third quarter, a 24% drop compared to the same period last year. While investment in intangible assets went up, spending on tangible assets such as equipment and production facilities plunged to 27%. Out of the 18 conglomerates that were found to have reduced investment spending, the biggest cutbacks were made among Korea's so-called Big Three, Samsung, Hyundai, and SK, accounting for more than 90% of the total decrease. Another area that Korea is watching closely is monetary policy. What will President-elect Donald Trump's posture be on a U.S. Fed rate hike in December? And what options does the Bank of Korea have if the Fed pulls the trigger? Our Eunice Kim takes a look.
With Donald Trump's election victory comes the question, will the U.S. Federal Reserve hike rates in December for the first time this year? Market projections for that rate rise had plummeted to below 50% last week, but since his confirmed victory, that's back up to between 80 and 90%. Market action have also been equally volatile. Dubbed the Trump tantrum, the global bond market was hit with a $1 trillion loss on Monday as investors moved their money to stocks on bullishness the Trump presidency will mean spending. As the U.S. dollar climbed to hover near 14-year highs, emerging economies saw their foreign investment rush out. The Kospi dropped to lows not seen since the summer's Brexit decision, and the Korean won at one point weakened by more than 4% against the greenback. Market watchers expect the volatility to continue until the Fed's rate decision comes on December 14th.
I think the stock markets will move according to the day's events. Rather than a rebound, we're likely to see more fluctuations day by day.
On the campaign trail, then-candidate Trump had some critical words for Fed Chair Janet Yellen, alleging the U.S. Central Bank's inaction was driven by political motives, arguing that interest rates were low because it helped with the optics of the Obama government. He added the 0% range rates allowed for a, quote, false market with lots of free money. The Fed chair, for her part, maintained that the U.S. Central Bank was independent and unaffected by politics. And her appearance before Congress on Thursday local time will be closely watched for any indications the Fed won't move in December. And should that move come next month, it's unclear whether the Korean Central Bank has the means to block a foreign capital outflow already underway. That's because even an eye-for-an-eye response of also raising interest rates stands to hurt those holding Korea's massive household debt. That's on track to surpass $1.11 trillion by the end of the year. Eunice Kim, Business Daily.
And staying in the U.S., now the so-called Trump effect is pushing up rates in the mortgage market in the country. The average contract on the popular 30-year fixed mortgage reached 4%, up nearly 0.5 percentage point in just a week as the sell-off in bonds continues. Local watchers say that the higher mortgage rates will destabilize an already wobbly recovery seen in the housing market, as the lack of homes for sale has drastically pushed up prices over the past couple of months. But despite growing uncertainties in the financial market following Trump's victory, investors expect there's now an 85% chance that the Fed will raise interest rates. A little over a year ago, the United States and 11 other Pacific Rim nations, representing nearly 40% of the world economy, reached an agreement on a Trans-Pacific Partnership, or TPP, the largest regional trade pact in history. And this ambitious deal drew a lot of attention, as many expected the TPP would help break down barriers in trade and investment between the U.S. and Pacific Rim countries. But after Donald Trump's presidential victory in the U.S., the Obama administration has conceded that it will not be able to pass the 12-nation pact in a lame duck session of Congress before Trump takes office in January. Now, Trump had called the TPP another disaster done and pushed by special interests who want to rape our country. So with that, Korea, which had expressed interest in joining the TPP, is now pulling back. Then what new strategies should Korea turn to now that uncertainties are growing on the trade front? Let's find out.
After 8 years of planning and 5 years of painstaking negotiations, the United States and 11 other countries, representing 37% of the global economy, reached an agreement on the Trans-Pacific Partnership, or TPP, in October last year. But just days after Donald Trump's presidential victory in the U.S. last week, congressional leaders told the White House they will not advance the TPP, as Trump had previously spoken against the massive trade pact. The deal's failure to pass comes as the U.S. sees a rising wave of anti-trade sentiment in the country in the face of China's growing economic presence. As for Korea, it had considered joining the TPP since 2013 and engaged in bilateral negotiations with the 12 member countries. But with news that the Obama administration will stop pushing for the mega trade deal, Korea has also announced it will halt efforts to join. What does the demise of the TPP mean for Korea, and what new trade alliances should the country look to establish now that Washington is likely to lean more towards protectionism?
And for more on this, Professor Yang Jun-suk from the Catholic University of Korea joins us in the studio today. Great to have you here.
Happy to be here.
All right, so what lies ahead for the TPP now that the Obama administration has given up on passing this deal? And also, are there any global legal issues in scrapping this deal?
Okay, well, start with the legal issues first. Every country had to pass the TPP through its legislature anyway, and there's always had been a possibility that the bill would not pass legislature. So legally, there's not a problem. However, because the U.S. had been taking a leadership role in the TPP as well as market liberalization, the fact that the TPP is not going to be submitted to Congress, it's not going to be passed, does mean that a lot of countries will be very disappointed in the United States. A lot of the issues that were involved in the TPP, as well as the level of opening, especially in the area of agriculture, was really pushed by the United States. So I think a lot of countries sacrificed a lot to form this TPP, and the fact that the United States, one of the leaders, would not be part of this anymore, I think will be very disappointing, and it probably will kill the TPP altogether for all the other partners.
What about Korea? I mean, Korea has been considering joining the TPP for some time now, but now with the deal likely to get scrapped, what impact would this have on Korea? Okay,
well, because Korea is not, well, let's look at the bad points first. Okay. The bad point is that, as I mentioned before, the United States will not be taking a leadership role in market opening, and probably not going to take the leading role in WTO or further FTAs or places like APEC or OECD. So if, as in Korea, you're interested in opening other markets, then we've lost a very valuable and powerful partner. So that's the bad point. The good point, though, is that we've been thinking about Japan as a competitor. And one of the methods that we've tried to do better than Japan is to establish a lot of FTAs so that Japan would have tariff barriers remaining while Korea do not. And there were some concerns that with the TPP, Japan would be leapfrogging over Korea because it would be setting FTAs with so many partners at once. Well, now that's not going to happen.
Then, with the TPP led by the U.S. about to fall apart, let's talk about China and its RCEP, or Regional Comprehensive Economic Partnership. And China is likely to, I guess, take the strategic opportunity to better sponsor this RCEP. So what are your thoughts on this?
Okay, well, now China definitely has the momentum behind it. Problem is, the RCEP negotiations have not been going too well either. I think because there's so many different types of countries involved, not only in TPP but in RCEP as well. We have a lot of advanced countries like Japan, as well as very developing countries like some of the ASEAN countries, Vietnam, and so on. It's been very difficult trying to get a common consensus to go ahead. And so as a result, RCEP has been moving very slowly. The fact that I think it's moving as fast as it is, very slowly, is because they felt that they were competing with the TPP. But now, since the competition is gone, even though China has the momentum, the RCEP negotiation may be slowed down because, well, they don't have TPP to compete against.
All right. Well, and some are also saying that it's possible that the Trump administration may come up with a new multinational free trade pact involving Asian countries. So what are your thoughts on this? Okay,
well, there's a lot of speculation. But as far as I know, Trump himself did not say anything about it yet. So it'll be very interesting to see who he gets as policy advisors, the secretary to various departments. Then perhaps you can get a rougher idea on what exactly he wants other than renegotiate NAFTA.
Now, there are also talks that emerging economies have been forming a trade pact of their own, excluding the U.S. So would there be any new trade pact or multinational trade pacts that Korea could join that could better serve Korea's own interests?
Okay, well, I think there's a trend toward having FTAs with similar-minded countries, and Korea can certainly try to join those. The only problem is the reason that countries are preferring FTA over WTO, economists economists prefer WTO over FTA because WTO allows not only wider liberalization, but also more in-depth liberalization. And the fact that it is more even and more widespread among different countries has more efficiency. But FTA, the reason that I think a lot of countries form FTA is that, well, they want to liberalize some parts of their economy, some parts they don't, so they tend to gravitate toward countries which have similar points of view. Now, if Korea fits into their plans, then fine, they're going to, we can form FTAs together. Problem is, if their idea of what they want to liberalize is not the Korea's view of what they want to liberalize, then they're not going to be able to negotiate.
All right. Well, now also, aside from the TPP, Trump had called the Korea-U.S. Free Trade Agreement a job-killing deal. Now, what are the chances of us seeing a revised version of the Korea-U.S. Free Trade Agreement?
I think there will be at least some pressure to change some parts of the Chorus FTA. Trump has been known as a very hard negotiator, even before he started running for president. So his initial bargaining position will probably be very, very hard. And I think the only way for Korea to sort of deal with Trump is for Korea to take a harder position as well. Chorus FTA may be responsible for about 0.4, 0.5% of Korea GDP every year. So that's a major hit if Chorus FTA does collapse. But on the other hand, we have about 2%, 3% growth every year. So it's not critical. It'll hurt, but it will not be anything that really will destroy the Korean economy. So I think we should be prepared to negotiate very hard.
All right. Well, definitely a lot of changes coming on the way, I guess. Thank you so much for coming in today.
Thank you.
And that brings us to the end, but we'll be back tomorrow with more business news that matters to you. So don't forget to tune in then. Thanks for watching, and goodbye.